Have you ever caught yourself daydreaming? What if I won the lottery? What would I do with all that money? Today, we're diving into the 10 stupid things people do when they start making money and what smart investors do instead. If you want to keep and grow your wealth, this video is for you. We're going to break down each mistake, show you the costly consequences, and then reveal the smart strategies to build a secure financial future. Let's get started. That first big paycheck hits different. You're picturing vacations, fancy dinners, maybe even a new car. But financially illiterate people see their paycheck as spending money. They buy luxuries before securing their future. Instant gratification fades fast. Smart investors play the long game. They follow the golden rule: pay yourself first. Save and invest at least 20% of your income. Every dollar saved is like a worker bee making more money for you. The more worker bees, the faster your wealth grows. Spending it all squishes those bees. So what are you going to do with your next paycheck? Blow it on things you don't need or invest in your future? The choice is yours. You get a raise, you feel amazing. Time for a bigger apartment, a nicer car, maybe some designer clothes, right? Wrong. That, my friends, is lifestyle inflation creeping in, and it's a silent wealth killer. Financially illiterate people let their expenses grow right alongside their income. They upgrade their lifestyle with each raise, thinking they're treating themselves, but in reality, they're just trapping themselves in a cycle of work, spend, work, spend. Smart investors, they see a raise as an opportunity to widen the gap between their income and expenses. They maintain their current lifestyle, maybe allow for a small calculated upgrade, but the majority of that extra income, straight into investments. Let me paint you a picture. Imagine investing just an extra $500 a month. That's like cutting back on a few dinners out, right? Now, let's say you get an average 8% return on your investments, which is totally doable in the long run. In 20 years, that $500 a month turns into over $300,000. That's the power of compound interest, my friends. Don't let lifestyle inflation rob you of your financial freedom. Live below your means, invest the difference, and watch your wealth grow exponentially. Let me ask you something. Could you cover an unexpected $1,000 expense right now without going into debt? If the answer is no, you're not alone. Most financially illiterate people live paycheck to paycheck, spending everything they earn with no safety net to catch them when life throws a curveball. Smart investors, on the other hand, they prioritize building an emergency fund. This isn't about saving up for a vacation. It's about having 3 to 6 months worth of living expenses stashed away in a safe, easily accessible account. Think of it as your financial fortress, protecting you from the unexpected. Car breaks down, you've got it covered. Lose your job? No need to panic, you've got time to get back on your feet. Medical emergency? You're financially prepared. Now I know what you're thinking. Graham, where am I supposed to find this extra money? Remember that 20% we talked about earlier? Yeah, a big chunk of that goes into your emergency fund first. It's not about sacrificing your entire lifestyle. It's about making small, strategic adjustments that add up to big financial security in the long run. Chapter 4. Good debt versus bad debt. Don't fall for this trap. Let's talk about debt. Most people hear the word debt and immediately think it's a bad thing. But here's the truth. Not all debt is created equal. Financially illiterate people get trapped in bad debt. They finance depreciating assets with high-interest loans. Smart investors know the difference. They avoid consumer debt, paying cash for depreciating assets. Good debt can help build wealth. A mortgage on a rental property generating positive cash flow. Good debt. A business loan for a profitable side hustle. Good debt. These investments can generate returns that outweigh borrowing costs. But even with good debt, you need a solid plan. Don't jump into a mortgage without research. Crunch the numbers and ensure it aligns with your financial goals. Chapter 5. Investing. Don't let your money sleep. Alright, let's talk about one of my favorite topics, investing. Here's a hard truth. Financially illiterate people are terrified of investing. They keep all their money stashed away in a checking account, where it slowly loses value to inflation. They think investing is too risky, too complicated, or just for rich people. Smart investors? They know that investing is the key to building long-term wealth. They understand that keeping all your money in a checking account is like leaving it out in the rain. It's slowly going to disappear. They don't let fear or lack of knowledge hold them back. They educate themselves and take action. And you know what the best part is? Investing doesn't have to be complicated. You don't need to be a Wall Street whiz to get started. Index funds, real estate, retirement accounts, these are all accessible, proven strategies that can help you grow your wealth passively over time. The key is to start early and stay consistent. Even if you can only invest a small amount each month, the power of compound interest will work its magic over time. Chapter 6. Get-rich-quick schemes. Don't be fooled. We've all seen the headlines. Meme stock makes millions overnight. Cryptocurrency skyrockets 1,000%. These get-rich-quick schemes are incredibly tempting, especially in today's social media-driven world. Financially illiterate people are easily seduced by these promises of easy money. They jump from one hot stock to the next, chasing hype and ignoring the fundamentals. They pour their life savings into risky investments, hoping to strike it rich quickly. But here's the thing. Get-rich-quick schemes almost always end the same way, with most people losing their shirts. Smart investors, on the other hand, know that building wealth is a marathon, not a sprint. They focus on long-term, proven strategies like diversified portfolios and compound interest. They ignore the hype and stick to their investment plan. Remember, if it sounds too good to be true, it probably is. Chapter 7. Financial education. Your most valuable asset. Here's the thing about money. It's not taught in schools. Most of us graduate without the slightest clue how to manage our finances, let alone build wealth. Financially illiterate people accept this as an excuse. They assume that money management is too complicated, too time-consuming, or just not for them. Smart investors understand that financial education is an ongoing investment, not a one-time event. They read books, listen to podcasts, take courses, and follow financial experts to stay informed and make the best decisions for their money. The truth is, you don't need to become a financial expert overnight. Start small. Dedicate just 30 minutes a day to reading a personal finance book or listening to a podcast. You'll be amazed at how quickly your knowledge and confidence grow. Chapter 8. Tax planning. Keep more of your money. Taxes. The bane of everyone's existence, right? Financially illiterate people treat taxes like an afterthought. They scramble to file their returns at the last minute, often overpaying because they don't understand deductions or tax-advantaged accounts. Smart investors, on the other hand, know that tax planning is an essential part of wealth building. They don't just work for their money, they make their money work for them by taking advantage of every legal tax break available. They max out their contributions to tax-advantaged retirement accounts like 401 KSS and Roth IRAs, sheltering a portion of their income from taxes. They understand the difference between deductions and credits, and they keep meticulous records throughout the year to ensure they're maximizing their deductions. And here's the pro tip. Consider hiring a qualified CPA. A good CPA can help you navigate the complexities of the tax code and potentially save you thousands of dollars in the long run. Chapter 9. Insurance and estate planning. Protecting your legacy. Let's talk about the what-if scenarios. What if you get sick or injured and can't work? What if you die unexpectedly, leaving your loved ones to navigate your finances? Financially illiterate people avoid these uncomfortable topics. They don't have adequate insurance, and they haven't even considered estate planning. Smart investors understand that life is unpredictable, and they take steps to protect themselves and their families. They have health insurance, disability insurance, and life insurance to provide a financial safety net in case the unthinkable happens. They also prioritize estate planning, creating a will to ensure their assets are distributed according to their wishes and setting up trusts to potentially minimize estate taxes. It's not about being morbid, it's about being responsible. Chapter 10. Multiple income streams. Don't put all your eggs in one basket. Here's a harsh reality. Your job security is not guaranteed. Companies downsize, industries change, and relying on a single source of income can be incredibly risky. Financially illiterate people fall into the trap of thinking their current income will last forever. Smart investors, on the other hand, understand the importance of diversifying their income streams. They don't just have a job, they create multiple streams of income to ensure they're never reliant on a single paycheck. This could be anything from starting a side hustle, investing in rental properties, or building an online business. The key is to create multiple avenues of income that can support you and your financial goals, even if one source dries up. So there you have it, the 10 stupid money mistakes that can sabotage your financial future, and the smart investor moves to build real, lasting wealth. Money doesn't disappear because of bad luck, it disappears because of bad habits. The financially illiterate spend, borrow, and hope. The financially savvy save, invest, and plan. Which path will you choose? Want to learn more? Follow for financial tips or grab a book on investing today.